Hi, I'm Hemalata from Investment Analysis class. So I would like to present regarding the assignment 2 that I did, which is the title of Divergence of Beliefs and IPO Initial Return, the moderating role of investor demand. So in my assignment, I have include 6 contents, which is introduction, the problem statement, literature review, design procedures, data analysis and presentation, conclusion, and recommendation. This is the introduction of my presentation, which is the first one is researcher. So the researcher of the article is Ali Al-Bada, School of Economics and Management from Xiamen University, Sepang, Malaysia. And the second researcher is Su Walu, Graduate School of Business, University Kebangsaan Malaysia, Bangi and Malaysia. So the third researcher is Mao Yong Tau, School of Economics and Management, Xiamen University, Sepang in Malaysia. The second one is for publication timeline. So this article is received at 11 December 2021 and revised at 19 January 2022, 5th February 2022 and 5th March of 2022, and it's accepted by 5th March 2022. So the study purpose of this article is investigate how investor demand moderates the relationship between investors' divergence of beliefs and IPO initial returns. So the context and also the hypothesis of this article is from the sample, which is 117 IPOs on Bursa Malaysia 2010 to 2019, and the theoretical framework is signaling theory and behavioral finance. So the investor demand information impacts IPO pricing, investor behavior, and decision making. So the key concept of this article is for issue in fixed price method leads to high divergence in investor opinions, potentially influencing IPO initial returns and causing underpricing. And also the second one is the investor demand, which is measured by oversubscription ratio, OSR. It acts as a critical signal influencing market appetite and also perception for newly investors firm. So the last one is for the key concept is IPO pricing methods, and a fixed price method, which is common in smaller markets. IPO price determined without considering investors' beliefs. And the third one is for book building method, which is preferred in developed markets, integrates investor expectations into pricing. This is regarding the problem statement of this article, which is it is access. The first one is for research focus, which is comparative analysis of IPO pricing strategy. And the second one is fixed rate technique, which is common in developing nations, simpler logistic, reduce cost, criticism, ignoring investor perception of true firm value. Third one is for book building strategy, which is under prefer in developed markets, accommodates diverse investor valuation, and can address underpricing issues better. So the next one is for investor perception discrepancies, which is fixed price method may not reflect true market value, and it's resulting in significant first day returns fluctuations, potential for higher underpricing. So the excess impact of investor demand, which is under over subscription ratio, OSR, indicator of investor appetite, may influence IPO initial profits. It also provides insight into market liquidity and future perceptions. So the research basis is for behavioral finance principle signaling theory, which is empirical analysis in 117 IPOs on Bursa Malaysia from 2010 until 2019. So this is understand IPO pricing dynamic in this article, which is impact of demand on pricing accuracy, implications for market efficiency in emerging economies, and the knowledge gaps for this article is limited research on investor demand's effect in fixed price IPOs and the need for deeper insights into emerging market IPO pricing mechanisms. So for the analysis of investor demand and pricing, investigate how demand modifies profit outcomes and enhance understanding of IPO pricing in less liquid markets. It also provides fresh insights into IPO pricing behavior and its implications and the implication for market efficiency in emerging economies. Next is for the literature review. So this article is the role of the investor demand and beliefs, which is for oversubscription ratio OSR. High OSR can lead to underpricing due to market pressure. For example, in the case of Al-Bada ETL 2019. And the second one is for demand drivers, which is privileged investors with favorable information boost first day prices. This is for the Damija and Aurora case at 2017. And for the theoretical models, the first one is for Rock's model at 1986, and for the Welch Cascade model 1992 for the divergence and also the divergence of beliefs. For Malaysian market specifics, which is fixed price IPO mechanisms, amplifies information asymmetry and speculations, does not adjust for investor expectation. This also under Rock 1986 case and also Welch 1982 case. Focus on quick profits over firm quality. For example, in Al-Bada ETL 2019 leads to exaggerate sentiment and higher price drift. So the hypothesis development impact of divergence of beliefs, which is positively impacts IPO underpricing on the first trading day, and the role of investor demand, which is moderates relationship between belief divergence and initial returns. Its high demand may lead to increased speculative activities and greater divergence. So next is for design procedures. The study overview is for focus on IPO underpricing in Malaysia's Bursa Malaysia. And the second one is for sample, which is 117 fixed price IPOs. The third one is for period, which is from the January 2010 to December 2019. The third one is for the control variables, which is offer price, flipping reputations, underwriter and auditor reputations, UR and AR, board reputations, private placement, listing boarding. So the methodology, which is for the model is cross-sectional regression using OLS and quantile regression QR. As for the dependent variable, it is for initial return, which is from the return from offer price to opening price on the first trading day. So the preferred measure is for reflects short-term underpricing more accurately than closing price. Which is for the data analysis and presentation, which is for descriptive statistics, which is from the average initial return 21% versus 19.58% by Al-Bada ETL 2019. As for the average price range, is for 18% and lower than previous report, which is 23.6%. The investor demand is 25.15 times lower than Low and Young 2019 Al-Bada ETL 2019. So the comparison is higher subscription levels compared to some emerging markets. For the OLS regression results, the price range divergence is positive impact on initial return, and for the investor demand is positive impact on initial return, partially moderates the relationship between belief divergence. So the quantile regression results is for 25th percentile low initial returns, which is weaker influence of belief divergence, minor role of investor demand. For the 75th percentile, which is high initial returns, significant implications of belief divergence effect by investor demand. 50th percentile is middle return, which is quasi-moderation, partial moderation by investor demand. For the control variables, which is it's under underwriter reputations, weak positive effect on initial return, and the listing board is higher initial returns on ACE market versus main market, aligns with Young and Albada 2018 on price drift. As for the summer implications, investor demand is crucial in moderating the effect of belief divergence of initial returns. As for the variation, its effects vary across different levels of returns and highlights complex interplay between investor demand, belief divergence, and IPO pricing dynamics. So as for the last one is conclusion and recommendation. The study focused on sample, which is 117 IPOs on Bursa Malaysia from January 2010 to December 2010. So the techniques is OLS and quantile regression, which is QR. So the OLS regression results is the investor demand, which is significant positive effect on IPO initial return, quasi-moderator in the relationship between belief divergence and initial return. So the quantile regression results is 25th percentage low initial result, and 75th percentile, which is high initial result, and 50th percentile is median initial result. So as for the rationalization, signaling theory is high investor demand signals potential capital gains and correlates with high quality IPOs, and great divergence of beliefs leads to higher initial returns and price drifts. So the practical implication is for investors and researcher. And the future research directions, which is explore other moderators of the divergence of beliefs and initial returns relationship. So the investigate IPO pricing dynamics and stakeholder behavior in different regimes.